So we had an interesting day on March 24th for BlackBerry Stock. It was pretty intense. We have about roughly a week until earnings, and this video is going to be covering BlackBerry Stock from March 25th to March 30th, which on that day at 5:30 p.m. Eastern Time, they'll be reporting their earnings. I'm going to be giving you guys the lows and the highs like always by analyzing the graph, throwing in some fundamentals, and also one quick thing. I apologize, I haven't been able to get videos out as fast as usual just because I've been busy with work, so I apologize for that. But thanks again for the awesome continued support. It really means a lot. Thank you so much. And quick disclaimer, like always, I'm not a financial advisor. I'm not a professional. And everything I do share with you guys is just my opinion. It is not advice. So please do your own due diligence and research before buying and selling. Do not buy and sell based off the opinions I do form or the information I do show you. I do own shares in BlackBerry, been holding for 6 years. So I'm a long-term investor overall. Now, I'm going to show one thing in the graph. If you've been a viewer on the channel before, you notice an upward trend support line dating back since October 2020, then back to us in November, December, January 2021. This is in the algorithmic view, by the way. And this looks like a mess if you're a new viewer, but I have the logarithmic lines as well because I'm going to be switching back and forth between the logarithmic and algorithmic. By the way, we closed at 9:58 on March 24th, 2021. Now, the reason why I'm showing the algorithmic view right now is because we're literally on the last leg right now. And you could be like, oh, well, this March 5th right here is not a touch point. If I zoom in, you could see it's an actual touch point and literally on the last leg. So hopefully we reverse back up to the upside. And this is the last leg for my September price target video where I elaborate on the roadmap to $180 price target, which is not in September, by the way. That's until 2026. But for the September price target, this is the last leg for holding it up through, but there is potential at 850 we could still see it. We might drop to $8.50. I'm gonna elaborate on that, and like always, I'm gonna cover the upside as well, just in case if we go up, and then the downside in case if we go down as well. But before I get to that, in terms of the fundamentals, we have a chip shortage that we need to be concerned about a little bit because it's affecting the auto industry. The production in the auto side, in the electric vehicles and all that stuff seems to be slowing down. So if that slows down in terms of the auto revenue side for BlackBerry, that will slow down too. And that could affect revenues in terms of the quarterly reports and all that stuff. Then the second thing is in terms of this earnings, there's 3 points. Okay, so I'm optimistic. Obviously, I state that in every video almost, but there's two quick short terms that could help us for this earnings, and then there's a long term fundamental thing that I found in the past that I'm going to elaborate more on this video right now. So for the short term, we have the Facebook settlement that, yes, they can't disclose anything, but I think what's going to happen is something's going to surface in this earnings for sure, because they're going to have to somehow have something report in this earnings, unless if Facebook gave nothing. But based off the legal side, there had to be an agreement on January 15th for an amount, it looked like. So it has to show somewhat something. So the best way they could hide it and not have just anything disclosed is through patent licensing. And I think it's still going to be significant enough where, yes, they could say, oh, it's from multiple companies in terms of patent licensing, and that's a way to hide it. But I think it'll be significant enough where they'll be like, well, that's a massive growth. So that's one positive. And then second one is they sold patents to a company, and that's going to be obviously a benefit. So in terms of revenue, that's going to be reflected in this earnings, unless if the settlement was I believe it was already fully settled. So I think that's going to be reflected in this earnings anyway. I probably should have checked that. I apologize, but I'm pretty sure I checked it in the past and it's fully gone through. So that should be reflected in this earnings as well. And then the third thing is, in a past interview, John Chen pretty much explained this earnings, but it could be pushed to the next earnings because of, again, the pandemic and all that stuff, and it's taking quite a while and all that stuff. So what I'm gonna explain right now, actually. So he explained that they're taking market share, or they're going to be taking market share from a competitor for the cybersecurity side, and he pretty much outlined it for this earnings time frame that it's going to be seen. The only thing is, though, because of the delay of the pandemic and all that stuff and the whole entire spiel, I think it might be seeping into the next earnings. Hopefully it comes to fruition in this earnings, but it could be potentially into next earnings, or mixed a little bit in this earnings and then start fully coming through to next earnings. So there's that in terms of fundamentals. But again, overall, I'm optimistic for their earnings and like BlackBerry stock overall. Now, if we come to here for the last leg to the upside, hopefully we reverse the upside. Now, if we don't, there's a chance, I'm going to quickly go through this point right here. There's a chance that if we break through this upward trend support line and come down, then we might start trickling down to hopefully no lower than 880 range. But if we do 850 range, which would take us to earnings, the reason I'm saying it take us to earnings is if we don't drop fast enough, then that's good, and we'll only see 850. And if we only see 850, then I'm hoping earnings will reverse us back up to the upside, back up to this upward trend support line. To have this upward trend support line intact, we don't want to break $9.50. Ultimately, $9.47, $9.44, between $9.47 to $9.44. Hopefully that's like the lowest for the false breakout and all that stuff to bounce back up to the upward trend support line. But if we do break that, and like I stated, I'm going to cover the upside as well. I'm not going to just cover the downside, but I'm just going to cover it because it's kind of fresh for the 850. But after that, we have support at 931, 927. Between that level, quite a bit of good support. But the only problem is I want to trickle down to this 880, and I'm going to explain why soon. But after that, we have good support at $9 to $9.14. Then we have support at 885 to 887. These are all good support levels. The only thing is, though, there's a chance we might trickle down to $8.80 range, 882 to 884, between that to 889 as well. Or not to 889, but 889, and then down to 882 to 884. The only thing is, though, we saw in the past, because it was part of the upward trend support line and the algorithmic view, right? But right now, if we broke through this, maybe we would start trickling down, and I hope it would just hold us through to the 850, ultimately 856 to 851 range, until earnings to reverse us to the upside. That's the thing. So if we were to break these support levels, yes, I hope they hold us through, at least to slow us down. That way we don't just break through 850, because if we break through 850, then we start seeing major issues. That's the only problem. So hopefully these levels hold us enough, like slow us down to the 850, and then that way earnings reverses, when earnings comes out, reverses us up to the upside. Now, if we reverse the upside like right off the bat as support and not even break through this upward trend support line, that is perfect. The first level we're going to have issues with is $9.63. And yes, that was a support level in the past, but because we're below it, it's going to act as a resistance. Then we have resistance mainly at 985, by the way, but 988, between 983 to 988, and that's mainly in the logarithmic view. So the reason why I included the logarithmic views is right here. So you see the March 5th. So let me just go back to the algorithmic view first. So algorithmic view, it touched this touch point right here in the upward trend support line. But then if you go to logarithmic view, it jumps up to the second line above, right? And if I zoom in, you can see it actually does touch it. But right here, this logarithmic view just got destroyed today officially. And it was at 978 right here. And what happened was it's like back tested as support, but then back tested resistance, broke through and back tested resistance. So that does suck, unfortunately. But either way, at the logarithmic view, that $9.83, 988 is pretty much this resistance line right here, where we back tested resistance, and if we go back up, we might get knocked down again as resistance, somewhere between the 983 and 988, depending on when we meet it. It could be higher a little bit, but I think by the time we meet it, that's where we'll have issues with. Then after that, we have issues with 995 to 999, and then we have issues at the $10 price point. Now, if we start breaking through these levels, I think this $10 will be a good resistance level, and $10.02, $10.05, $10.11 to $10.15 as well. But I'm kind of optimistic that once we break through this early phases of $10, we'll pretty much not skyrocket, but spike up to $10.27, $10.37 relatively quickly a little bit. And I'm going to explain why. Is because I think what's going to happen is it's going to be almost like a false breakout to the upside, where this downward trend resistance line, it doesn't look clean, by the way. I know it is. I think this is mainly for the logarithmic view on the 5-day chart or something, but there's a downward trend resistance line. You can pretty much see it anyway. It's going down, ultimately keeping us down, dating back since March 15th. But by the time we get up to the $10.27 to $10.37, we're pretty much going to get knocked down by this downward trend resistance line and this moving average. And if you're a viewer on my channel in the past, you've seen that two moving average lines, now like short and long moving average. Now I've included a mid-range moving average. So this is a short one, and the short one's pretty much around that 1037 price point. Especially when we get to it, it's going to drop lower. So 1027 to 1037, downward trend resistance line, moving average, just knocking us down. Now if we pass these levels, then we're stepping into the 1044 to 1054 range. I could see us getting stuck here for quite a while actually, but like technically you could say, because we're breaking downward trend resistance line, we might just spike up past this, and we could have a quick spike up to 1060, 1061 to 1069, and then get brought back down to 1044, 1054. That is a play. I think that most likely would happen, but hopefully the spike up would be quick enough, well not quick enough, but like strong enough, and hopefully not just quick enough, but hopefully strong enough to bring us up to 1072, 1074, 1078 range right here. And if that's the case, that's awesome. But then we might, hopefully, if we go up to 1088 range, we might get knocked down by 1085 by this mid-range moving average right here. And then 1088 is a horizontal resistance level. So that's going to be a little bit difficult to pass. I think we would pass it, to be honest, if we got up to that level anyway. The level I would be more concerned about is 1092. So 1092 is a horizontal resistance level, plus it's the long moving average resistance level. So we have long moving average resistance level at 1092, and we have a horizontal resistance level at 1092 as well. So I'm not saying we can't pass it with ease. Yes, we can, but I could see resistance, quite a bit of resistance out there. Now, obviously, there's resistance at like 1095, 1099 as well, but once we pass this, I think we would have issues mainly at $11 price point. Again, not 1099 will definitely, you'll see it trickle back and forth, but either way, $11 price point is the one that you'll be more concerned about. Ultimately between $11 and $11.04. If you've been a viewer on my channel, you've heard me mention a bunch of times $11.04. That's going to be an issue for sure. Passing 1108 is going to be a good sign. That's going to be passing 1108. It's not going to just be hitting 1108. And what we need to do is, if you've seen my video in the past, I've shown this downward trend resistance line that's supposed to act as support. Maybe in the algorithmic view kind of shows it, and it's mainly in the logarithmic view if you would have showed better, but you can see it bounced off as support. Unfortunately, we did not pass it, got knocked down by it and all that stuff. So if we need to pass 1165. We're going to get knocked down by the 1150 range anyway by the downward trend resistance line, but 1165, hopefully that would not be a false breakout. That would be a good sign. Now, one thing that could happen is everything goes like perfect and start breaking through all these levels and all stuff. Keep in mind 1150 or even 1165 will go up. We get knocked down and head back down to this upward trend support line. So just because we get, like, the problem is this 1104, since we broke down it kept us down for quite a while. That's the only problem, and I'm having issues. Like, earnings hopefully will reverse us to the upside fully. Like, if this earnings destroys, we are, in my opinion, good, but there's a chance we could be kept down and all that stuff. So just keep in mind, just because we hit, like, for example, like 1150, we could get knocked down at that price point and come back down to this upward trend support line, and you'd be like, oh well, like right here, let's say if we go quickly up and then quickly down, we could see 975 again, right? So you'd be like, oh, I thought we were good and we would not see $10 again or something. Well, or like $9 again. We could see $9 again. So that's the problem. So it all depends on how solidified it goes up to the upside, and maybe we have support levels that keep us up and we don't break through them and all that stuff. So there's that. So hopefully you enjoy the video. That's pretty much it. Thanks again for watching. If you did like the video, consider dropping a like. It does help out the channel. Thank you so much for that. If you do like videos like these and other stock videos, passive income, mortgages, credit scores, financial freedom, consider subscribing. It does help out the channel. Thank you so much. If you have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. And that's pretty much it. Thanks again for awesome support, and I'll see you guys in the next video. Peace.